What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in R Pink. Welcome in Mark Dutch. Welcome in Kespo. How are you guys doing? Welcome in Oran, Alex. Thank you guys for joining. Much love to everybody. And we are going to go into some really important things that are happening for Bitcoin right now, guys. In yesterday's live stream, we talked about a few levels of price discovery targets for Bitcoin to break out of. And I did say yesterday that it was looking bullish and that it was looking like we were going to get a pretty big push to the upside here. And we have started to get that push to the upside, breaking above some very, very key levels of resistance. And in yesterday's video, I did say that if we break above this midline with specifically a volume imbalance candle to the upside, and we come back down and flip that to support, that we could continue up to our next major targets in the price discovery phase. Abir, what is up, man? Thank you. They are crazy, awesome thumbnails. The guy who creates them is a genius, and I think that guy is you. So thank you, Abir. I appreciate it all. Welcome in, man. Welcome in. Okay, guys. So yeah, Bitcoin is pumping, and we are breaking out of our 64 day long trend, breaking to the upside and breaking some very, very key targets now. I'm going to just go ahead and zoom out once again onto the 3-day chart, and we're going to cover this pitchfork. And this pitchfork is pulled from our last bull to bear cycle. And I just want to explain the significance of breaking above this midline, which we have done earlier this year. We broke above the midline and we were able to hold above it for a couple months. Ultimately, with some bearish catalysts, we failed and rejected and came back down below it. But earlier, a couple months ago, we tested it again a couple times and we rejected. And then we took the lows of our range, our 60-day range, a couple times. Now we're breaking above it with a daily candle, a big daily imbalance candle, and closing above it. If actually haven't quite closed above it yet, let's just say that, haven't quite closed above it yet, but it looks highly probable that we will close above it. And if we can close this daily candle above this midline here, I do expect a small retracement coming soon to backtest this now as support to continue up to much higher levels. And we are at another major key resistance. And I did show this a little bit yesterday in Jason's Discord, and I showed this towards the end of the Bitcoin portion of our stream yesterday. So let me go ahead and go onto my main Coinbase chart, and this is the 3-day chart, and we're going to look at this trend that has been the entire trend of the bull market, literally from the bear market lows to our first major break in structure highs down to our first major higher low on the chart. And we had been trending within this channel all the way up until we hit our macro golden pocket, pulled from the all-time high down to the bear market lows. And then we had busted above that channel, hitting our 1.618, making a new all-time high, retracing all the way back down to that midline, where you can see historically that midline for almost all of the bull run has held really, really well. And now we are breaking back up to the top of our channel. And this is a very, very key decision point for Bitcoin, because we are attempting to maintain the overall trend is this pink channel with the midline being that white line in the middle. We are trying to maintain our bull trend here. And if we can get above this channel high, which is right around 118K, 117.9 to 118.1K, and we can start to close, I would say, daily to weekly candles above this area, we could see another huge breakout, potentially all the way up to hit our 1.618 again, which is coming in from around 150 to 175K. There are some major targets before that in price discovery, but if we look at this trend has been guiding us on key swing positions for the entire bull market. You know, what was important when we started looking at the bear market being done is when we broke our last prior internal highs here. You can see we came up for our first initial push, rejected from those highs, but then was able to break above those highs, back test those highs as support, not only once, but twice, hold those prior highs as support, confirming that the bear market might be over. We are breaking larger market structure bullishly and flipping that what used to be resistance now into support. So this channel is a very, very key trend because it is establishing the bullish trend for this entire cycle. Now, once we've established that trend has truly and really guided us on many, many different levels. When we hit the top of the channel the first time, we got a 10K dump to the downside. Back tested that midline, broke out of that channel, and came to our 1.618 fib extinction, which is a very, very important fib extinction. And this is why we were looking for swing shorts up in March around 74K. We did take those swing shorts. I personally wrote it down to the back test of the channel. Got out of it at the back test of the channel, but we did end up breaking back inside the channel, back testing that channel, not only on lower time frames, but on higher time frames, and making our way down to the midline, which is historically held ever since really the beginning of the bull market here. That midline has held. Now, just recently, on our drop to 74K, I guess semi-recently, on our drop to 74K, we were attempting to break that midline to the downside, but we were able to reclaim it, push up to the top of the channel. You can see up here a couple times. Let me come zoom in on this price action for you guys. Came up to the top of the fib channel, the main channel, which was acting as support through this area. Once we lost it, of course, it's going to be flipped to resistance again. And now if we go ahead and zoom in, let's zoom in onto the 4-hour chart. And guess where we topped out last night? Hitting into that fib channel. Absolutely perfect. Seeing a bit of a rejection there. We are still not really seeing a major rejection, but we are hitting into a bit of a rejection here. And we are going into the weekend, which does mean rangy type price action or maybe some slow corrective grind to the downside. But overall, if we look at our oscillators here, very, very strong money flow coming into the assets. If we go on to our daily chart, this is what is very, very important, guys. We are about to invalidate bearish divs on the daily, a fourth drive of bear divs on the daily. And you can see here, let me just pull this up full screen. Our money flow is rising to the upside here really nicely on the daily time frame. And I did say if our daily candle closes really bullishly, that would start to happen. But look at our momentum wave here. Our momentum wave is starting to break the trend of lower lows in the momentum waves, or lower highs, excuse me, in the momentum waves. Money flow on NAMI, which is actual money flow, it is rising to the upside very, very steeply, and we are getting a lot of new money coming into Bitcoin right now. But we are at a very key resistance, and this resistance could give us a bit of a choppy range and some price action, especially going into the weekend. We can tend to chop around this range. What I'm personally going to be looking for is one of those descending channels that we often see, a corrective descending channel where we can chop down to a local 382 or a local 0.5 and then continue to push up here. But as far as larger time frames go, I want to go ahead and go back to our multi-cycle pitchfork here. And let's zoom out again and let's talk about this pitchfork. I'm just going to give a quick refresher on this pitchfork if you didn't join yesterday's live stream, or if you didn't join prior videos, if you haven't seen prior videos on it. So this pitchfork was pulled from our COVID 2020 lows up to our bull market 2021 highs, being the 65K highs, not the 69K highs, because that was more of a corrective move and a flat correction or whatever you want to call that there. And then down to our bear market lows. Now, since we have been in our bear market lows and developed the third pivot of this pitchfork, once again, this pitchfork has guided us in all major swing positions throughout the entire cycle. We pumped up to the lower band. We saw a really nice swing short to make a higher low, found a higher low, pumped up to the upper part of the lower band, rejected, had another nice short, but then we were able to have that flat correction in our wave 2 here and pushed up through the band, rejected, back tested that band now as support, flipping what used to be resistance, what used to be macro resistance here is now flipping to support, showing strength for Bitcoin on a larger macro time frame, showing that the bull market is on. Now, once we flipped that band to support, we pumped straight up to our midline. once we got to our midline, this is a 3-day chart. Remember this. So each candle is 3 days. We spent a couple weeks up in here trying to break above that midline. Multiple attempts on lower time frames to try to break above that midline. We could not do it. So what do we expect? We expect a grind down to backtest our major level of support again. We came down, backtested that major level of support again, held it again, had a very, very bullish reaction from that level, and then we made our last parabolic move, breaking above our key midline that was acting as resistance. Now it is being flipped to support. We were holding above it as support for about 2 months, and I call that range the all-time high range. Now it's no longer the all-time high range, obviously, but this range prior, from November through February, was our prior all-time high range, and we did create a bit of some bearish price action in here. We were looking for actually a distribution down. If you guys go watch my video, I think it was December or January, I made a video about distribution to the downside based off of what we were seeing on Market Cipher B as this range was forming. We were developing confirmed bear divs on the chart, and money flow was draining out of the asset while this range was forming. And all we needed really was a bearish catalyst to kick off that distribution. And of course, Bybit gets hacked right here. Boom, distribute down, drop. So this midline was now not acting as support. You can see multiple times acting as support over the months. We lost it. It turned locally into resistance, and then we dropped. Now, I understand you guys are going to say, well, why do we stop right here? There's no major pitchfork support right here. Well, this is pulled from prior bull cycle to bear cycle highs and lows. But if we look at our pitchfork from this cycle, guess what? We hit into our support level perfect. Hit into our support level perfect, and I will go through this pitchfork again as well. And we talked about this pitchfork band yesterday, and I talked about the top of the band, not the lower part of the band, because we had already tested the lower part of the band here. I will go into that in just a second, but let me get back to the other pitchfork. We now, after hitting into a more macro support level, came up to test that midline again, found some resistance a couple times, took the lows of our range. Each time we rejected from that midline, let me actually go ahead and show this to you more clear. We had our range lows, we rejected from the midline, bearishly backtested, made a lower high, came down, took our liquidity of the range lows. After taking our liquidity of the range lows, we make another attempt at the midline. We come up to the midline, we reject, then guess what happens? We come down, we take our range lows again, taking liquidity 2 times, creating that 3-wave corrective move to the downside. After that happens, now we have taken our range lows. We're going to make a third attempt at breaking above this midline. If we reject here, it is not going to look good. If we break above it, guess what? Moon is coming, baby. You know, the moon is coming, and the moon is here. So, all right. Now, breaking above that midline, if now we can close some daily and weekly candles above the midline, we can expect maybe a rejection from a little bit higher, and then a grind down to back test this now as support. And if we can flip this to support, well, guess what, guys? We are going to be looking like some really new levels are coming. Let me check the chat real quick, and then I'll go into the last pitchfork that we're looking at. So welcome in, everybody. J Wheels, welcome in. I will go through ETH. We will go through some. I've got about 2 hours, guys. So we will go through many altcoins. We will go through whatever we can in that time, and I'm going to try not to spend as much time on Bitcoin because we covered a lot of it yesterday, but I do want to, for the people that missed yesterday's live stream, or just for a refresher for you guys, update, I do want to cover that. So you shorted 108K, Mr. Moon. Well, here's the thing, man. If you shorted 108K, you should have had an invalidation for that trade. Anytime you're going into a trade, you should have a pre-planned stop loss where your thought is wrong, where your trade plan is wrong, and where you get out of that trade. And you should have a pre-planned at least TP1, take profit 1, where you can take profit 1 and move your stop loss to break even. So if you shorted 108K, your thought at the time should have been, okay, let's see, where's 108K? Right in this area, about this area here. So we were towards the highs of the range. I get that. We were towards the value area high of our 60-day range. You were right here, around 108K. So what your thought should have been, if you were shorting that, okay, I'm shorting the value area high because I think we're going to reject from the value area high again. Our my stop loss is going to be, it has to be, if you're shorting that, it has to be above the local highs, like these local highs at 110.6. And of course, you're going to have to calculate your position size based off of that stop loss. So that should have been your technical invalidation for the trade. If you break these highs, you're breaking market structure bullishly, you're breaking this local downtrend bullishly, and that would be your invalidation to get out of the trade. Your TP1 could have been the POC. It could have been the value area low. You know, you could have looked at some fib levels, some other lower time frame stuff in there, naked daily points of control. But you should not be holding on to a trade that is going against you. Or I should say this, you should be having a plan, a clear plan with a clear stop loss before entering any trade. If that plan gets invalidated, you get stopped out. Now, you also have to calculate your risk, your position size. So in this case, it's a 3% risk on your trade. So whatever your portfolio size is, say you're risking 1% of your portfolio, you're only going to be able to use about 1/3 of your entire portfolio size. And then if you get stopped out, you're going to lose 1%. So you need to be calculating your risk ahead of time based off of this number right here. And you need to be having a clear invalidation. If your plan is wrong, you get out, you take the loss. You shouldn't be using enough of a position size where if you do take that loss, it's going to hurt you by like 10 or 20% of your account, really even 5% of it. So I would say work on that risk management, man. That is the most, if you want to be a long-term successful trader, risk management is the biggest thing to get down. Discipline, risk management. FOMO is another big important one. Don't chase this pump. You know, if you missed the pump, you missed it. Wait for a retrace. And I'm sorry if I'm being a little harsh, but that is, if you really want to learn how to be a long-term profitable trader, it is so key to do that. Okay. Yes, James Steffen, 114.3 to 114.5 now is going to be attempted to be turned into support. And if we come down there with some local bullish signs on the chart, like 1 hour, 2 hour bullish divs on the chart, I will look to long that. I will look to add to my long. I'm already in a long. I did take profit last night at exactly $117,900. I took out 75% of my trade. So I will add back 75%, or I'll add back a proportional amount and compound that if we do come down here and look like it's going to be flipped to support. Okay, Mark Dutch, awesome to see you in here, man. You're awesome as always. Thank you for joining. Kespo, what's up, buddy? Good to see you. False Prophet's in here too. False Prophet, what is up, man? You guys, this indicator here, NAMI, False Prophet created this indicator, and since I've been using this indicator in conjunction with Market Cipher B, my entry and exit confirmations on trades have been out of this world. With these two combined, I am telling you, I really have a good edge on entry and exit confirmations. Of course, first, everything is price action first, indicators second, right? So I'm not relying solely on any indicator ever. I'm relying on price action. I'm relying on key levels. But once we make it up to those key levels, if I see bearish confirmations on the chart, it gives me more confidence to take that trade. So these indicators here give me that confidence, specifically the money flow on both of these, and when you see bear divs or bull divs. And that's what I use these indicators for. So if you guys are interested in NAMI, I do have a 50% discount code in the description, and there's a link in there if you want to try it. False Prophet's the creator of that. Really good dude. Amazing coder. If it's there if you want it. If not, that's totally cool. You know, everyone trades different. R Pink, it's so good to see you. Thank you for joining. I got my mods in the house today. All right, guys. Yeah, so it's looking pretty good here, guys. And Bitcoin is seeing that major breakout. But once again, I would like to say we are at the major fib channel resistance. Now, I do think I showed you guys, let's go back into that last pitchfork. So I showed you guys this pitchfork. This pitchfork is pulled from the entire last bull cycle to bear cycle, right? It was pulled from our COVID lows. Excuse me here. It was pulled from our COVID lows to our 65K highs down to our bear market lows. So this is a multi-cycle pitchfork that is going to be guiding us for the major swing positions in this bull cycle that we've been in for 3 years or so. Now, within this bull cycle, we can pull smaller pitchforks to get smaller key swing position areas to get us more local areas of resistance to continue this trend, more key areas. So now if we zoom in, I'm just going to go to my other chart here. If we zoom in, looking, keep in mind this bullish structure here, this entire bullish structure for this bull market. So now we're going to go to the other chart, and in this bullish structure, we are pulling a pitchfork from a key impulse within that structure, within our entire bull structure, from the lows of wave 3 to the highs of wave 3 to the lows of wave 4 of a 1, 2, 3, 4, 5 here. Now, if you look at this structure, I've had this pitchfork on my chart for about a year now. Really, I pulled it right after we made this low. I had this pitchfork. Anyone that has been in Jason's Discord knows that I've been talking about this pitchfork. This is why I did look for major swing shorts up at the top of the pitchfork. Go back and watch my videos from late December. You will see that I was talking about this. And we had been, this pitchfork has been a major guide for us in this last year of 2025. For the whole entire year of 2025, this has really guided us because we came up to the top of the pitchfork. If you're in a wave 5, you have your wave 4 correction here for all of 2024, your 2024 corrective range here, and then we start some impulsive price action towards the end of 2024 up into 2025. Well, a lot of times that top of a wave 5 will be at the top of a pitchfork, and we did get that. We got a little bit of some wickage up past it, but you can see, once again, guys, this upper band, I call this the upper band and this the lower band, these green lines here. And let me zoom in onto the daily chart. The daily chart, you can see that our all-time high range here, the upper band held as support for months. We did see some wicks past it, but no daily candle closes below it. But then we started to get some weakness here. Once we started to get some weakness, if you go back and look in the Discord, in Jason's Discord anyways, I was giving major caution signs that we're about to break down out of this range and distribute. We broke down a little bit, took some local lows, then we came up, bearishly backtested that band, and then got the huge drop. Now, just like I explained yesterday, this was a little bit of an anomaly based off of a Trump tweet that happened on a weekend about a Bitcoin reserve going live when it wasn't actually going live, and we got a false 3-wave corrective move, a pump up, liquidated a lot of people, and then we lost that midline. So this kind of was a little bit of some manipulation based off tweets here, but you can see overall, once we lost that midline, backtested once, backtested twice, 3, 4 times, 5 times, we could not get back above the midline. So what do we expect? We expect a rejection down to the next major pitchfork support level. Boom, hit into our next major pitchfork support level, being the lower band. Boom, hit into the lower band. Nice bullish reaction, breaking above the midline. And just like I talked about yesterday, guys, if you see what you want to see when you break a major pitchfork level, like especially a midline, look at what happened here. We broke it with a volume imbalance candle to the upside, a volume supported candle to the upside, breaking straight through it with power. Well, what did we just do yesterday? Break straight through it with power on our more important, bigger, higher time frame pitchfork. Very bullish sign. And what happened, guys, after we broke through this smaller pitchfork with a candle, we got a little bit of a range, a little bit of a upwards range here, and then we continued the impulsive price action. So I'm suggesting that we might get a little bit of a range here, even backtesting that, and get more upwards price action if we can hold it as support. So now coming back in here, let me just get rid of these guys here. We have broken above this midline, but you can see here in that range, because it was like an ascending channel type of range here, we never came back down and backtested that midline. And I cautioned about this as it was happening. We broke straight up to the upper band without backtesting this midline. And that was a bit of a concern for me, because anytime you break a major level, oftentimes you will backtest it either bearishly or bullishly before, like here, break above it, backtest it bullishly, flip it to support, make a new all-time high. Reject from the top, backtest it bullishly, make a new all-time high. Reject again, hold it as support. Now this time we kind of lost it and started a little bit of a bearish trend there, but you get the idea. Anytime you break a major level of support or resistance in a healthy market, you will backtest it to confirm a flip to support or resistance in a bearish trend, and you will continue that trend. Well, we did not confirm any flip to support all through this area. So when we started to reject from this upper band, one of the things we were looking at was this midline. And we came down in our nice 3-wave corrective move, finally hitting that midline. By the way, I did mention this to Coons. I mentioned this to a few people as it was happening, that we hit a major pitchfork midline and that we could see a big impulsive move. It could have been the end of the corrective move, because a lot of us, including myself, by the way, was looking for a potential move down to our macro value, our point of control. If we pull this entire range of 2025, we had our macro point of control just below at 96.5, 96.6, or yeah, 96.5. We were potentially looking for a move down to this area, but we did know that we had our midline that was a couple $1,000s higher. We hit into that midline, saw a very, very nice bullish reaction. Look at the wick there. Look at all the buyers stepping in, followed by a nice big volume imbalance, bullish engulfing candle, and flipped our anchor VWAP to support, which this is your bearish trend of the whole corrective move of the last, 40 days or so. Flip that to support, and then guess what? Off to the races. Off to the next major pitch, up to the upper band again. Now, in yesterday's YouTube live stream, I talked about how this band coming in around 115.5, 115K, the lower part of the band, I said this very clearly in yesterday's video, the lower part of the band had already been tested as resistance in this area. Yes, we did reject from it, but it was tested. So I suggested the next time we come up, we're not going to see another major reaction from that band again. I was suggesting that the top of the band was going to be where we would see our major possible rejection or a bigger move to the downside. Well, look at what happened yesterday after the stream ended. And I swear, guys, literally right after the stream ended, we started getting some bullish price action. It's like, why does this always happen? But look at what happened yesterday. Broke back above the band. Now this morning, back testing it as support very, very locally on lower time frames. Back testing that band as support. Guess what? It's a high probability we continue to work our way up to the upper band here, which is going to be around 121 to 122,000, or 121 to like 121.5, depending on time. Also, I've told you guys in the past, what is very, very common in these bands? We form ranges inside the bands, inside the upper band, inside the lower band. If you guys want to see very good examples of that, Ethereum, when we started to break the band, not this one, hold on, this guy here, Ethereum forming range within the band here as we were hitting that upper band range for 60, 90 days, and then you break the band to the upside, you come to the top of the pitchfork. We'll cover Ethereum in a second. Ethereum is at some key levels right now, but we'll cover that in a second. And okay, so now we are at, this is a little bit of a tough thing now. I gotta admit, for me, this is a little bit of a tough thing because we are flipping our band to support, holding it as support, and continuing to push to the upside right now. The top of the band is coming in around 121K to 121.5, but we are at our major fib channel resistance. So we're either going to reject from this fib channel resistance over the weekend and maybe see that slow grind down to 114K, or we're going to chop within our band for a bit, coming up to the upside, seeing a small deviation of this guy here. We could do this, something like this, where we chop within this band for a bit, hit above it, and then lose it and close a weekly candle down below it. If we start to close weekly candles above this pink line here, you guys, we could see continuation, really strong continuation. I want to go on to the weekly chart real quick because I want to show you guys our weekly trend that has been the entire trend. And by the way, if you guys want to know if a trend is valid, like this channel that I pulled from these three pivots, the very first pivots of the bull market, well, check this out. Let me go on to the 3-day chart real quick. Even though we know that trading is based off the cycles of psychology, fear and greed in the market, right? Human psychology. So human psychology has worked the same in the past as it works now. So even though this pitchfork, or this channel, let me get rid of this thing real quick, it's in the way. Even though this channel, the pivots were pulled from the bear market lows up to our first major break in structure highs, up to our first major higher low, you can see how well this channel has been respected in the past because it's based off human psychology, right? Every time we come to a major channel, we get some sort of range here. And every time even though this channel wasn't even pulled while this bear market price action was happening, every major range consolidation we got in the bear market was at a major fib channel level, because trading is based off human psychology, and human psychology has not changed. So we know that this is a very, very valid trend here. We also know by past price action history that it has been highly respected. So anytime you are using a channel, a pitchfork, any sort of tool, a fib fan, gone stuff, anytime you are seeing something that has been more respected in the past, more highly respected in the past, it's more likely to be respected in the future. And this is the way you can pull valid pitchforks, valid channels, valid Fibonacci levels, all these different things, trend-based Fibonacci's. But you want to use these indicators, these tools, to help you establish the trend. And once that trend is established, you look at your major key points within that trend, and you look for confirmations. That's what I use Market Cypher and Omni for, to enter or exit trades, or to not enter and exit trades. So that is what let me just rephrase. Now we're at a major decision point right now. We are at the highs of the channel. We busted back inside of it on this corrective move. If we can break out of this channel, there is a potential possibility we can move all the way up to the 1.618 up here. You know, between 150 and 175K, depending on how long it gets there. But before that happens, we have some more local major resistances ahead of us. So right now, the upper part of this band will be acting as a resistance. It's naked. We haven't back tested the upper part of this band since our all-time high range earlier today. The most important resistance from this pitchfork is going to be the top of the pitchfork. 137, 138, 140. And I talked to Jason Casper, who is encouraged me to start this channel, encouraged me all this stuff. Love the guy to death. I showed him back, I think it was in December of 2024, a major 145, 144K bull market top target that I have, that if we chop around in this band for a bit, maybe see a bit of a rejection, back test that 114K midline here, and then continue to work our way up to the top of the pitchfork, 145 could be aligning very, very nicely with the top of this pitchfork. And that might be our bigger, you know, we might see that be a temporary or like mid time frame top where we could see a bigger move, even all the way down to take out some lows here. So I'm not saying that's going to happen. We don't even have near enough data on the charts to even get there yet. We'll have to look at that as more data develops on the charts. But pay attention to these macro targets. If they've been respected in the past, they are more likely to be respected in the future. So that's why we can map out these targets and just keep them in mind as we're coming up to those levels. So we're in a bit of a conundrum, guys. We are at a major resistance right now, but just about a couple $1,000s above us is the top of our naked pitchfork band that we haven't hit since, you know, at least anytime recently. And I'm going to be looking at that, a potential wick up to that, maybe not this weekend. It might happen come market open next week or something like that. But locally, we are flipping our band to support. We're holding it as support. We're coming up. We could just be chopping here. And if we do reject from our local golden pocket area, let's go ahead and pull that. It looks like we're hitting into that golden pocket right now. So there's a potential that we could reject from this area. If we do reject from that area, guess what you can do? You pull your channel from the highs to that golden pocket lower high. You bring it down to your initial lows. And now we have our micro trend that we could follow, where over the weekend, we might continue to grind down within this channel. You can see the midline's already being respected, so it looks like a valid trend already semi-locally here. And we might continue to grind down throughout the weekend until we hit, you know, 114K, or even just, we need to pay attention to these range lows here, these little dead cat lows around 115K, 115.2. So, but on the other hand, if we continue breaking this golden pocket to the upside, we're probably going to keep grinding up to 121. And then see a bigger rejection from there. We can range between the band, between 121K and 115K, 116K. Okay, let me check the chat here. Rodney, you want the pitchfork settings? Well, if you look at the pitchfork, I just have these three things turned on: the 0.5, the 618, and the 1. I obviously don't use the background, and your pitchfork style is going to depend on your trend. So for this one in particular, it's a skiff pitchfork, but it's not always going to be that. You know, it just depends on your trend. And look at which one fits the trend the best, which one is respected the most, because the one that is going to be respected the most is the one you're going to want to use. You want to see how you made that pitchfork? Rashid, which pitchfork are you talking about? Because I have shown you guys the levels on those pitchforks. I've shown you the levels on this pitchfork. This is our multi-cycle pitchfork. If you zoom out onto the 3-day chart, it is just your bear market lows from your prior bear market. Oops, not. Hold on here. Prior 2020 COVID lows, okay? That's your 2020 COVID lows, March of 2020, up to your 65K highs. That's going to be your second pivot, down to your bear market lows. That's your pivots. So just grab your pitchfork tool, put it on that low for your initial target. You bring it up to the high, then you bring it down to the low. Boom. There you go. You have your pitchfork. And if you're looking at this pitchfork is pulled from this bull cycle's wave 3 impulse. You know, when BlackRock got made the listing for approval, and then when it got listed and pumped. So you're just going to take, now this is a different pitchfork as far as it is a skiff pitchfork as well. Okay. So you're going to bring that just from your lows here at August 23rd. You're going to bring it up to your highs in March of 2024. Down to your March lows, your 2024 lows in August. The 0.5 is the light green lines, which is the parts of the bands, and then the 618 is the upper and lower part of the band. And then of course your 1 is your top and bottom. Okay, yeah, I do think what the spinner trades, the way that money flow looks, I do think we could continue this grind to the upside. You said it's best, the one stream, you get comfy, you over risk, you get setback months. Yes, Kespo, really good comment there. So Kespo talked about this. We've talked about this in past streams. Here's the thing, you guys, if you're not using proper risk management, you can start getting good at finding key levels, finding, let me zoom in here, finding all those nice TA targets, you know, as far as like daily levels, weekly levels, in POCs and stuff like that. And you're starting to get good because you're seeing that your levels of TA are being really well respected. And you win, you know, 5 trades in a row, and you're like, you start getting overconfident. Oh man, I got this TA thing down now. I understand where the key levels are at. And you start risking 10% per trade, or you start risking, you know, even half your portfolio per trade because you're getting greedy. And one time your TA is completely right. It comes up to that level. It sees a small rejection from that level, and then it continues pumping, and it's probability. Nothing is certain in markets. Just because it's a key level of resistance doesn't mean it's going to reject from there. Very good example of that yesterday. This was a key level of resistance. If you would have put a limit short there, you would have got stopped out, or you would still be underwater if you didn't have a stop loss there, or maybe even liquidated if you were using high leverage. So just because it's a level of resistance doesn't mean you actually just blindly short or long it, but you have to have a plan ahead of time with a valid stop loss and a valid take profit level in order to do that. And of course you're gonna take, if you're shorting this here, if you're shorting that, you're going to have to develop a plan ahead of time so you can calculate that stop loss percentage. That number there is going to determine your position size. And that is what if you want to be a profitable trader, you should always be developing a plan and a exit strategy ahead of time. Okay. Yeah, Nami is great. I love Nami too. I use both of them, and both of them together have been awesome. I messed up my Ether holdings when it crashed on February. I didn't go in the red on spot. I've been holding since 2020. It rocketed past the price I sold it at. Yeah, Felix, that's tough, man. It's really always best. So you sold when it was in a downtrend. Generally, that's when people get fearful and sell, but that's generally the time to buy. Now is when you want to sell, when it's been pumping like crazy and you're coming up to some key resistance above. it's going to be hard to sell here because you don't, you think it's going to keep pumping and stuff, but that's generally when you want to buy when it's in the red and sell when it's in the green. You have to go against those feelings. It's trading is a psychological game. It really is. Yeah, you guys, I know you guys got questions on how to draw pitchforks. Let me know about them. I'm going to make a pitchfork tutorial and I'm going to post it in my community. I think next week, guys, I'm going to start that Telegram community. And if you want to join the community, it's going to be free. The only thing is you guys have to register and at least deposit $100 with BYDFI. And so if you guys have, it's a win-win. So it's free for you guys. All you have to do is deposit $100. You'll get a 50% deposit bonus on that $100, and then you'll be able to get added into the Telegram where I will post some of my setups, some of my thoughts on the markets. Obviously, I don't trade much on the weekends, so don't expect much on the weekends, but I think that's a pretty good opportunity for us both. It helps me out with my affiliate account, but it's free for you guys, and you're depositing your own money. You're getting a major deposit bonus on your own money, and you can kind of be in a community with me. So I will give more details on that later. But okay, let's get back here real quick. Yeah, there will be another cycle with discounts, but here's the thing. You can still, I would wait for a retracement, obviously, but if ETH retraces, you can still buy, even if it's going to be a higher price than your initial entry. Say we come up to 3,100 and we reject 3,100 and then we come back down to backtest this band at like 25. You can still buy 25, even though it might be higher than the position you sold at, and then write it up to new all-time highs and sell there. It's still an opportunity. Now, yes, you're not going to make as much money if you just held it, but no one's perfect, man. You can't expect yourself to be perfect. You're not always going to catch the exact bottom. You're not always going to catch the exact top, and you're not always going to sell at the right time or buy at the right time. So you have to give yourself some leeway. Trading is not a game of perfection. Okay, daily breakout on NAMI gave the signal before the pump. Yes, NAMI does give these. Guys, on NAMI, these hidden bull div signals and hidden bear div signals are so fire. Like when I see this signal here, like look at it, we got that signal here and then boom. I really do, NAMI, especially for those hidden signals, are really good for continuation moves. Yeah, okay, so hope we ranged and pumped. Yeah, it's looking like that. Jason Casper is the GOAT, man. That guy's awesome. Love that guy. Not only one of the best traders in the world, but a genuinely good dude. Okay, so we got ETH, we've got Curve, we've got XRP. Don't let me forget about those guys. We will start going into altcoins now. Could you control plus AAA? Okay, wait. Control AAA. It's not doing anything, so I'm not sure what. Are you trying to get this bigger? I'm not, the control AAA thing is not doing much. Let me actually see if I need to, if it's because I'm on my brush. Huh. No. I'm sorry, Mark Dutch. I know I need to get this bigger. Like a lot of people have asked about that, making that bigger. What I can do is I can move this and then I can kind of shrink these a little bit so that at least it's looking a little bit better there. Frankie is another GOAT. Frankie's awesome, man. His way of trading is awesome. Okay. Yeah, Jay Wheels, thank you for that comment, man. I just do my best to show you. I know I have a unique style using pitchforks and channels that a lot of people don't have, but I do have a lot of commonalities with a lot of the people. I do use some Elliott waves. Of course, like Andy and Coons are way better at Elliott waves than me. They're way more in-depth with them. But I use Elliott waves generally for bigger trends and to find out like corrective versus impulsive price action. And then I just use, I love Market Cipher and NAMI for those entry and exit confirmations, which is very similar to Jason. You should make the numbers and letters bigger. Mark Dutch, how do I do that? Because I'm open to doing that. I just don't know how to do that. Okay, real quick while I'm waiting for that, we'll go into Ethereum right now. We will go into XRP, we'll go into Curve, And guys, a lot of our coins that I just talked about yesterday are hitting to key levels. Solana, we talked about Solana coming up to SFP the highs into 166. Guess what happened? SFP the highs into 166. We talked about Sui coming up to SFP the highs at 356 to 359. Sui came up, SFP the highs at 356, 359. Say is breaking out like crazy. We finally hit into our naked monthly point of control and SFP'd our highs, breaking out of our channel. Breaking out of our channel here with really nice bullish price action. And Sui, I'll talk about Sui because Sui is very bullish. Model 1 accumulation, break above the midline, back test the midline, off to the races. We can come all the way up to the top of the pitchfork here or even higher. So we'll talk about those. Let me get back to Ethereum. Okay, the fact that I'm here says enough. Okay, you should numbers. Yeah, Mark Dutch. If Mark Dutch is here, you know that I'm doing something right. That's for sure. Like, no joke there. How do you get in POCs? Okay, there is a indicator. If you come into indicators here, now I do think you have to have paid, I think you have to have a paid market cipher to do this, but if you just type in PVP, which stands for periodic volume profile, that is your thing you're going to use. And once you have your periodic volume profile, you're going to come into settings here, and you want to extend POCs to the right. So it's going to extend all naked POCs to the right. And then you can just go by, if you want to get daily POCs, you go to day. If you want to get weekly, you go to week. If you want to get monthly, you go to month. So like, for instance, yesterday, let's look at our naked daily POC from yesterday. So I'm going to turn that on. It's going to populate here. It takes a little bit here to populate. And let me zoom in to lower time frames so we can get a better look. But you're going to see here in just a second, this is going to populate. And it's going to give us all of our NPOCs here. Okay, so yesterday we have an NPOC, you can see right here at 2777. So now what you can do, I do anyways, I come in here, I just grab my horizontal line, I'm going to mark it out as an NPOC, and then I have a template, I just, put in naked daily POCs, and then I'm just going to come into my object tree, I'm going to label it here. What is that? 2775 naked daily POC. And then I'm just going to throw it into my folder of naked daily POCs. And that's a way you can keep track of all these things. You should update those every single day for naked dailies. Only mark them out if they're naked, really. If they're not naked, if they've been ran through like this, you don't really want to keep it on the chart anymore. But you can see we have 3 naked daily POCs on this move to the upside on Ethereum. Yes, let's see. Thank you for the super chat, T-Mac. I really appreciate that, man. Oops, let me see here. Love your coverage on BTC and Chainlink. Yeah, and I'll cover Chainlink for you too. I'll cover Chainlink. It has been a week, man. It's been really, really good, dude. So thank you for that super chat. I really appreciate that, actually. You and Jason are the only guys that give me super chats. And by the way, you guys don't need to give me super chats, but it is much appreciated. Numbers look good on television. On my phone, it's not so good. Okay. I tried pressing Control A. Let me try press. Yeah, and then I do Control A, and then I did Control A. It's not doing much, Mark Dutch, but after the stream, I'll look into seeing if I can get these numbers bigger, because I understand that is frustrating when you can't see those numbers. Have you used daily deviation fibs? Not too much, but I know that they are there. So isn't that more of like a range candle theory? Like, but that is a good. I've seen that work on many times. Okay, real quick, let's go into Ethereum. So guys, Ethereum. Let's zoom out onto the daily time frame, and I'm going to cover 2 major pitchforks on Ethereum. So we have our bearish pitchfork. This is a macro bearish pitchfork pulled from the prior all-time highs down to our bear market lows up to our new cycle highs. And this was a higher high just by like dollars, but it was a new higher high. And you can see we rejected. We here once again, guys, talking about the bands and forming ranges, formed a range around the band. So oftentimes around these bands, you'll form a range. Then we dropped through the band, came to the bottom of our macro channel. And let me actually, before we get into the pitchfork, let me cover this channel real quick. So on our entire bull market push to the upside, and by the way, this wasn't the bottom of the bear market. This was the bottom of our little 3-month dump. Not 3-month dump, sorry. That was the bottom of August 2024 correction. this trend has been our entire trend for the entire bull market since the lows in 2022. And so this trend, very similar to Bitcoin's fib channel, has been a very important trend. You know, this trend, if broken to the downside, you can say Ethereum is in real trouble. Well, we've been trending since 2022, pretty much all the way till 2025, December 2024. So yeah, 2025 in that channel. And when we started coming to the bottom of it, we started seeing weakness. And of course, we got that flash crash that happened early in February, the first Sunday of February. But once we broke that trend to the downside, that's a bad sign. That means we're breaking our entire bull cycle trend to the downside. Bitcoin has not done that yet. Even though Bitcoin's trend is much steeper, it still hasn't broken its trend to the downside. Ethereum broke it to the downside. And in doing so, well, first of all, we pulled our bearish pitchfork based off of our three major pivots. Once we started a downtrend, right? We started at lower lows, or there was our low, lower high, lower low, lower high, lower low. So right here, we have already diagnosed that we've started a bearish market trend, a bearish trend on lower time frames. Then if you even look at lower low, lower high, now there's your bigger bearish trend already confirming. So now that we created a lower high, actually that wasn't a lower high, that was a higher high. That was a double top there. But we had kind of already started to see some weakness up in this area. And once we started rejecting from here and creating a local bearish trend, you can pull your bearish pitchfork. And so you pull your bearish pitchfork from the prior all-time high to those lows to the high here. And let me make sure. Sorry, guys. I just want to make sure this trading view does this crap. Okay, there we go. And once you can see, we chopped around in the band for a bit. Let me zoom out to the day, zoom into the daily, chopped around in the band for a bit, lost the band. We did find some support at our macro channel. Let me hide this for just a second now. Then lost the channel. Now we lost the midline, came down to the lower band, had a bounce from the lower band, but overall created a lower high, you know, chopped around in the band for a bit and then dropped to the bottom of the pitchfork. Now, when we were hitting the bottom of this pitchfork, I was telling everyone this could be a major, major long opportunity. It was also a macro golden pocket area. There was a bunch of support down in this area here. And you can see here, after hitting into the bottom of the pitchfork, came up to the upper band, or the lower band, the lower part of the lower band, we had a rejection, but made a higher low. Then we busted through. Once again, guys, pay attention to these volume imbalance candles, busting through the resistance with a volume imbalance candle and flipped that midline, support, and then guess what? Busted through. Once again, volume imbalance candle, busted straight through the midline. And then we pushed our way up to the upper band. And let me get rid of this range here. Chopped around in the upper band for a bit. And while we were chopping around in this upper band, I was letting everyone know this could act as major resistance. For about 2 months, we were struggling with this upper band here. One deviation above, hitting into a weekly and a naked monthly point of control up there. But trying really hard to break it. We couldn't break it, so we lost it to the downside, and we came to our local golden pocket. So there's a reason why we stopped here. It's our anchored VWAP, which if you're going to maintain your bullish trend, that anchored VWAP does want to hold as support. You can see it held as support, but we wick past it quite a bit. Well, where did that wick stop? If you grab a Fibonacci from your prior range lows up to your highs, you can see we hit the golden pocket. From the prior range lows to the new range highs. Hit the golden pocket, overall held our anchored VWAP, then showing that the bullish trend wanted to continue. The second we bounced here from the higher low golden pocket retrace and that anchored VWAP, we should have expected eventually to come break these highs. And now you can see a nice parabolic move breaking above that band, finally breaking the band. We even back tested on low time frame as support, and then boom, we pushed up to the top of the channel. Now I'm long from about 2,600 on Ethereum. I'm still long, but I took 50% of the trade out right here yesterday at 29.80, exactly 29.80. I had a limit TP set because we are coming up to the top of the pitchfork. And these pitchforks, the top, if this bearish trend is going to continue, like this is a more macro bearish trend, so we could see a small deviation above it to hit into our big purple box. If we reject from here and then lose this pitchfork, this bearish back test here, I will look for shorts. And potentially up here, I'm even going to look for shorts too. But you can see we're coming up to a major resistance. So what is that major resistance? Well, if we pull our Fibonacci from the cycle highs down to our cycle lows, you can see the golden pocket's already on there. I just wanted to show you that. Our golden pocket is coming in between 3,067 and 3,155-ish. Now, we also have a naked weekly point of control. You can see I have it marked out on the chart. If you want to find that naked weekly point of control, come into your PVP indicator, go into settings, go into week, turn it on, and you will see that we do have a naked weekly point of control up there. If it goes back that far, sometimes the indicator doesn't go back that far. Let's see if it will this time. Yes, right there. So you see that naked weekly point of control right in that area. Okay. It's our only naked weekly point of control until the new all-time high. So very, very important resistance. Okay. But what else is there? What else is there? I showed you guys this yesterday. If we look at that macro channel, let me get that weekly log channel. Okay, let's turn that on again. Now, didn't mean to do that. It is the bearish backtest of that channel. So what I would like to say to you guys is every time you are in a multi-year trend or a larger trend, right? This trend here was multiple years. This uptrend here was multiple years. We lost that trend to the downside. And what happens when you lose a trend in a channel? You oftentimes will come take the liquidity of at least the second pivot. We flushed enough to take the liquidity of the second pivot of that channel. Then we now are reversing. And the key backtest after your multi-year trend, your key backtest, it's called a bearish backtest because we lost it bearishly. Now, we bounced from a very key support level. If we come up to that area and reject the bearish backtest of this channel, what the market is saying is this multi-year trend is no longer intact. We are going to come up here. We are going to reject from here. And it's a possibility we could grind our way down and make new lows. Now, I'm not saying that's probable. I'm saying that's a possibility if we reject from $3,100. So that area there at $3,100 is a major resistance, major resistance. Our macro golden pocket of this entire dump. It is our naked weekly point of control. It is our bearish backtest of our macro log channel. It is also very, very near the top of our pitchfork. So it could be a small deviation above the pitchfork to hit into that resistance and then a close right back underneath it. So I am telling you guys, I am taking at $3,100 or, $3,130-ish naked weekly point of control. I am taking major profits and looking for potential swing short opportunities. Now, once again, guys, I am not just going to blindly set a limit there and hope it rejects. Once we get up here, if and only if I am seeing bearish signals on my confirmation indicators, I will look to enter a trade. If I am not seeing those bearish signals, I will not short. I will let it bust through because there's a possibility that we bust through this. What I think is going to happen is we're going to see a small rejection from here, maybe come back down to test this range POC, and then we could break back in it and reestablish that bull trend. So that is a probability to happen. Okay, now on Ethereum, we've shown you guys this chart. We've shown you guys the log channel, the bearish pitchfork. Well, there is another pitchfork that I pulled. I'm going to go on to my other Ethereum chart. And this pitchfork is a very, very important pitchfork pulled from the lows of our correction, of our cycle correction down to $1,400, up to our first initial highs where we rejected that naked monthly point of control down to our range lows. And now let's go ahead and come in onto lower time frames, the 4-hour chart. And I'm going to show you guys, this is our more local trend to the upside. And since the lows of Ethereum earlier this year. So you can see that this pitchfork, we were ranging in this sideways range here for quite a while. Ooh, gosh, I hate how trading does that. This sideways range, we kind of lost it to the downside, but we're able to hit from that anchored VWAP and bounce. Now, once we have our major pivots, we have the lows of the impulse to the highs of the impulse to our correction lows, taking out, range high to range low. Lows of the impulse, range high to range low. Now you pull this pitchfork. This is a more local pitchfork looking at more local price action. Look at this pitchfork. We, busted above the band, back tested the band, came up to the midline, rejected from the midline, made higher lows. We're able to bust up. We busted through the upper band and we're back testing it now with support. But look at where the upper band is coming in. The top of the pitchfork, right around $3,100. So your local trend, You even have more confluence of major resistance around that $3,100 mark. $3,100 is a major area where we could see this pump stop, and then we could see a bit of a reversal here, or at least a bigger retrace to continue higher. So I'm telling you guys, $3,100, and then even like 3,300 is going to be another major level. We have some big stuff around 3,300 as well. Okay, let's see here. I'm going to read the chat real quick, and then we'll go into the next one. Spread Strokes, thank you for the super chat, man. I really do appreciate that. Sure your doctor has a cure for that. How do you make the fib channels? Well, I showed you guys this in yesterday's stream, but the fib channel is just a normal channel. So like, let's say we zoom out to the 3-day time frame, and you're just going to pull like any normal channel. You're looking, why do I keep doing that? You're going to be looking for swing positions. So for instance, like on this last 60 days of price action, I will show you real quick here. I was looking at a channel on these last 60 days. You're taking it from key swing positions. So we had our initial highs right here. So I'm going to anchor my first pivot at that initial high. We had our lower high rejecting from the 886. And then we have our low from the first liquidity grab. Now we were chopping in this channel. You can see how well nicely it was respected. Came up to the top, flipped it to support, busted up. On a fib channel, it's the same thing. You're just going to take, instead of a normal channel, you're going to come into your fib tools and you're going to use fib channel. Boom. 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 Because it's a bearish channel, it's going to give us bearish targets to the downside. So that's how you pull a fib channel. And if you want to do it for this bull market, you're just going to go to the bear market lows. You're going to put your first pivot there. You're going to put your second pivot at those highs and your third pivot there. And it's going to give you that fib channel. And make sure you're on log scale. We're dealing, that's probably why it might not be working for you, is because you're not on log scale. With such large fluctuations in price, more than 100% moves, my scale is on log scale. If I take it off log scale, that fib channel does not work. I mean, it still works, but it does not look the same. You can see that it's much different off log scale. But you guys, if you're using such big explosive moves, you should be using log scale. I mean, that's 600% moves. If you're using more than 100% move in volatility and fluctuations in price, you should be on your logarithmic scale. Okay. Yeah, okay. I know because I saved the video. Yeah, awesome, Kespo. Thank you. Yeah, you guys, if you got anything out of this stream, please like the stream. Like if I've given you any insight on the markets at all or helped you learn something in any way, would you please like the stream just to help me get out there on the YouTube, get the algorithm going. So, okay, so I got XRP, I've got SUI, I've got CRV, and let's see here. All right, I'm going to cover those. I'm gonna spend a little bit less time on them because we have a lot to do and I only have about 50 minutes left. But XRP, guys, long story short, we had a major pump, major impulse to the upside on XRP. I covered this in yesterday's video in detail. So if you guys need to know more about this, go look at yesterday's live stream. But since that impulse to the upside, we started ranging sideways for 7 months here. 7 months we started ranging sideways. And I did talk about this descending channel. This descending channel, if I zoom in onto the 4-hour chart, let me go ahead and clean this chart up a little bit here. I'm going to hide this volume profile for just a second. We established this descending trend. Let me go to the 8-hour, sorry, just so we can see a little bit better. Off of these two lower highs, this high, your all-time high, and then your lower high that was created right after it. And then I pulled it down to that flash crash lows from early February. That's your third pivot. Now you can see your midline's been respected. This is a clear, valid trend that has been being respected. So we came up, we hit the upper part of the channel in conjunction with the value area high of that range. We rejected, we came down to the value area low. And let me get rid of this. This shouldn't be here now. But yeah, we came down to our range lows pretty much. We held those range lows and we were able to re-enter back within our volume profile, showing some strength to the market. But what happened yesterday, guys, and I talked about this yesterday, I said descending channels, oftentimes any sort of channel, when you break out, if you break out with volume to the upside, this is all liquidity. This is a liquidity trail that is built. You know, whether it's a 1 hour channel or a 1 day channel, that's liquidity that is built. And when you start to break that channel, it can sweep and liquidate all of this really quickly or stop it out, and it creates an explosive impulse to the upside. So yesterday we started to break the channel to the upside. Very, very good. Not yesterday, a couple days ago, we started to break that channel to the upside. And we were looking first and foremost to come up to our large range point of control, which was at 240, but we broke above that. So yesterday I told you guys we have a high probability to move up to the value area high. What was at the value area high? We had at 257, that's what we talked about yesterday. We had some stuff up at the value area high. Well, we busted straight through the value area high as well because, and the reason why we're busting so extremely to the upside is because for 7 months we've been consolidating and building this liquidity trail to the upside. Now that we're breaking this bearish trend, just like with Bitcoin, you're going to see follow through to the upside. You're going to start squeezing out all of these positions. Look at all this liquidity trail here, squeezing that out, squeezing out all the liquidity, and now you're going to make runs at the more major liquidity levels. We have a major liquidity level coming up just above us, and I did say in yesterday's video that if we do break 256, we're going to come up to 301. And look at, we're well on our way up there right now. Pushing above 256, breaking this box here, breaking the value area high of our range. Now that we're breaking the value area high of our range with volume to the upside, exploding to the upside, we have a high likelihood to come up to our next major resistance. Well, what is our next major resistance? It's this purple box right here. We have a fresh weekly level in there. You can see, actually, we're hitting into a weekly right now before that, but we have a weekly level up above that hasn't been hit yet. We have a liquidity grab. That's the key thing, guys, is this liquidity grab right here. Liquidity grab into a weekly. We also have a naked daily point of control up there. You can see a naked daily point of control up there. We have a macro 786 fib pull up there. But here's the thing, guys. We were looking at a move to come up to take out all-time highs because of this shot down here. We bounced from our macro 382. So anytime you have a big impulse to the upside, you can see we had a big like 600% impulse to the upside here. Now, after that impulse finishes, you're going to pull your fib from the lows to the highs here, and you got to make it on log scale, you know, 382, which is your strong trend, and then you come in here, log scale. Okay. And now you're on log scale, your 382 often acts as support or resistance in a strong trend. Well, guess what? Come down, hit that 382, bounce from the 382. What did that tell me right then and there? On higher time frames, we are still in a strong trend to the upside. So no matter what happened after that, I was expecting to continue to break up, to break to new all-time highs. Because we were in a very strong trend, corrective move, hit into the 382, strong buy reaction, strong bounce. So anything that happens afterwards is an opportunity for a retrace to get in for the pump. And I've been talking about this for weeks on my YouTube channel, and it's happening. Now we're breaking our bearish 7-month trend to the upside with volume and coming up to some key levels. Now, yes, I do think we could, it's a high probability that we make new all-time highs on XRP, but I do think we will see at least a retrace from this box. Now, say we hit into this box, we retrace, we can look at some local fib targets. Maybe it's going to be a wave 4, and then we could, you know, this could be a 1, 2, 3, 4, 5. Actually, let's look at something here because I don't want to see this as an ABC. If we go from low to high to low here, and let's turn on our ABC targets. Okay, so be aware, guys. The one thing that could be concerning is we could be in a flat correction or a correction to the upside, with all of this being pushed down as like maybe a complex correction. 3-wave move up, rejecting from this area, and if we do reject from that area, and there is a potential we could come back down, creating a larger like flat correction up here. That's one bearish possibility. Now, it's not my main scenario. My main scenario is that we're going to break out and continue to new all-time highs. But just pay attention to like that 314 to 353 level. There's a potential. Let's actually look at this here. If this is the start of a next major impulse to the upside, like on the daily, then our 4.2 area, there's a potential that this could all be a wave 1 here. This could be a wave 2. This could be a wave 3 all the way up to here. We could retrace in a wave 4, to prior all-time highs, and then 5. This could be the start of a brand new impulse that happens on XRP. Because we finished an impulse, we saw a multi-month correction here, and then afterwards you can start your next impulse. So just be aware that we could be in a big wave 3 starting. Let's look at our volume here. Is our volume increasing? Yeah, nice volume increase spike on the push up so far. Now, it's not as nice. I mean, this was such a crazy event that happened, so don't pay too much attention to that. That was a crazy liquidation cascade, and yes, it ended green because we liquidated so far and we retraced it back up, but nice spike in volume on this push to the upside, healthy push to the upside here. Money flow crossing into the green on the daily time frame. Money flow heavily in the green on the daily time frame on NAMI. You know, all indications are that XRP is going to keep going, but that doesn't mean we won't see small retraces on the way. So if you're bullish on XRP, obviously you're not going to be getting in right now. I mean, it would be dumb to get in right now. We pumped, 30% or something crazy. We pumped quite a bit, 25, 30% over just the past couple days. So you're not going to get in right now. You're going to wait. Unfortunately, if you can do scalps, low time frame scalps, but if you're looking for a bigger swing position, then I would be personally waiting for a rejection, wait for that retrace. Now, here's the thing. This was our volume profile, our fair value for XRP for the past 7 months. Now that we're breaking above that fair value, if we do reject from local resistance, there's a potential we could come back down to test what was once considered overvalued or resistance, now as undervalued or support. So if we come back down to that 257 area, you could absolutely be looking for a long if we're making bullish divs as we're grinding down to here in corrective price action. Look for a swing long opportunity at 257 to push up to potentially new all-time highs and much, much higher. So I am still long on XRP. Let me look at my entry here. Yeah, I'm long from under the POC, under 228. So XRP, I did take some profit at 241, and I took some more yesterday at 257. I'm still a little bit in that position, but I'm going to take a third set, take profit here. But if we do plan to come down to 257, and I am seeing bullish confirmations on lower time frames like 4 hour and under or 2 hour and under, I will look to long that area and continue to push up. Guys, give me just a second. I will be right back. Give me just 1 second. Okay, guys, I'm really sorry about that. I am back. So, anyways, XRP, I do think we have a high likelihood to continue up to resistance up in this purple box. Look at that SFP into the weekly and look at that naked daily point of control up there. But this general area, and we also have a naked weekly point of control up there at 310. So look at between 302 and 310, really that weekly. Let's see, that weekly is at 302. Yeah, between 3.2 and 3.10, we could expect some resistance to come in here and maybe see a bit of a retrace, but I'm going to be looking to long any retrace that happens here. This does look like it could be a potential smaller impulse, 1, 2, 1, 2, our big 3, so we can get a retrace and a 4, and then a 5 and a 4, 5, just to complete this smaller impulse here. Actually, let's zoom in and look at that. Yeah, this 1, 2, maybe this is a 1, 2, and this is some sort of correction in here. And then your wave 3 starts here. So now I think our wave 3 is not done yet. I think our wave 3 is going to continue until we hit this resistance. And then we could see a bigger push. Let's see here. Let me do this real quick. I mean, look at your volume on that push to the upside. Look at this spike in volume here. And that's exactly what you want to see in a wave 3. You want to see a massive spike in volume. And so far, we are seeing that massive spike in volume there. Money flow, very bullish here. I think this push we're seeing now is going to continue till there. But also, check this out, guys. Naked weekly point of control, 256. Let me make sure that is a fresh naked weekly point of control. Because if that is a fresh naked weekly point of control, then that is your support. It's not. That was from yesterday. Okay, let me get rid of that. Anyways, I do think that XRP is bullish. We're going to continue higher. Let's look at this. Let's go to our 2.618 fib level. All right, our 2.618 fib level, guys, in a wave 3 impulse, the 1.618 is a common target, but oftentimes in very parabolic moves, you'll break it to the 2.618, 3.618. I even saw once Doge hit like a 6.618. So that 2.618 fib level is right on top of that naked weekly point of control at 310. So this move, 1, 2, 1, 2, our 3 could continue up to 310, reject. We could see a retrace in a 4. We could see one more 5, one more 4, one more 5. Something like that to complete this little impulse inside of a wave 3 of a much bigger impulse. So overall, XRP looking bullish here. XRP looking to break out to new all-time highs. I do think it will. Be careful, guys. This here is such a parabolic move to the upside. It is a liquidity trail, parabolic liquidity trail, that if it starts to break trend, you will get a quick flush. And so it's very, very dangerous to long right now. Very dangerous. Even if you think it's going to 310 right away. Be careful that with longing that. Now, if we pull back, if you're looking for scalps, if we pull back to the VWAP again, that VWAP holds, guess what? You have an opportunity to look for a scalp there. Let me actually go in onto like the 30-minute chart. 30-minute chart, money flow actually looks really good. I mean, hidden bull div signal just printed on NAMI. I think this thing is going to keep going, but we did reject. This is why when I first pulled on this chart this morning, you saw a little golden pocket here. I pulled a golden pocket from these highs to these lows. I turned on our golden pocket retrace. Now, if we come up to this golden pocket, which it looks like we're on our way up to, and we reject it, then we could be seeing a small internal corrective move down and then explosion. So let's just look here. Yeah, our corrective move, and if we come up to that golden pocket, we could push down to that 257 area, which is the value area high of this range, our bigger range, excuse me. Let me zoom out onto the 4-hour chart. So value area high is in our little corrective area. If we come down to 257, for sure, I'm going to be looking to long that. But just to let you guys know, very dangerous to long the parabolic pump like we are now, if you're not already in it. Now, if you're in it from where I'm at, and you took profit once, twice already, if you want to add to it, I mean, it's stupid still to add to it right here. But if you're going to add to it and it's still going to bring your average position under this value area high, you know, you do you. I'm not doing that, but you do you, you know. All right, let's go into a CRV. Now, CRV, guys, curve, I want to show you, this is going to be a very, very prime example of why we use log Fibonacci levels. So let me go ahead and delete this real quick. Someone asked about this morning. That's why one of my buddies asked about curve this morning. But curve was in a massive downtrend for a long period of time, and we did come into some more macro support levels down here. I believe, let's see here. It was our golden pocket from the very low to the high, our log golden pocket. You can see that it was our log golden pocket from our bear market lows, or not bear market, correction lows, excuse me. I keep saying that. Correction lows of August 2024 up to our highs of 2025. We came down to our macro golden pocket. We saw a nice reaction from that macro golden pocket. But look at, because this is more, guys, this is a prime example of this stuff. We go from the low to the high. This is more than a 100% move. This is a 600% move to the upside. Now, if you pulled the Fibonacci from the lows, dang it. Let me just use this one. This Fibonacci is pulled from the lows to the highs, but you do not account for log scale. Look at where your golden pocket is, and you're going to be trying to long this golden pocket. First of all, this price action here is not a 61% retrace of all of this, right? It just doesn't look like 61%. It doesn't even look like 50% of it because you're not using the proper scale. You're on logarithmic scale. So, but once you click this same Fibonacci pull from the lows to the highs, you click it, you turn it on based off log scale, it's going to shift it down to where, look at, now this is properly over 50% down to 61%. So now we bounce from our log golden pocket. Well, I'm going to show you another example. So we made our push to the upside. We did reject taking local highs. You can see took our local highs here. Changing market structure. That was our first change in market structure, right? Because that was our big higher low. I guess you could say this was too. This here, this was kind of your first change in market structure actually, but we're continuing to break market structure bullishly here. Then you see a retrace that happens for a couple months after doing that. Now, after you retrace for a couple months, we can look at, now, let me get rid of this golden pocket. We can look at a golden pocket pulled from the lows of our last big daily lows to our daily highs, right? But let me turn that off log scale. Now, if you weren't using that fib based off log scale, you're going to be looking to long the golden pocket at the improper place. We come down, we do get an initial reaction from there because a lot of people don't know to use that. You get your initial reaction from there, you make another lower high, and then you break below it. But because this, guys, is more than a 100% move to the upside, 150% move to the upside, you're going to take this fib and you're going to put it based off log scale. Now it shifts it, your golden pocket. Guess where we bounced perfectly from your golden pocket. And this could be the start of a big wave one. I mean, it's not necessarily, we have to be careful because this could be a larger corrective trend here. But if this is the start of an impulse here, your wave two retraces most commonly to the golden pocket, and then you could see a big explosion in a wave three here to the upside. Not quite comfortable with that yet, but the point is we hit into our macro golden pocket perfectly, found support, even formed a bottoming range down here on lower time frames, and now we're impulsing to the upside here. And really, we don't have much in this area. If we go zoom out onto our weekly charts, you can see there's no weekly resistances in here. If we zoom onto our daily charts, there's no daily resistances that haven't been taken. Our next daily resistance is up here around 73 cents. Well, what else is up there? So first of all, we can mark out that daily level at 73 cents. It's right on top of your golden pocket. So we have a liquidity grab here of this big wick, and because this wick was such a powerful wick to the upside and then kept the downtrend, there's going to be a lot of liquidity above that wick. So it is most probable that curve continues to push up to grab that liquidity into our daily and our golden pocket level, and then we maybe see a continuation down even further, making the bigger correction, or we make a higher low and then continue this impulse pushing up. You can see now on curve, we have a monthly level at 89 cents above our highs. So anytime you see an SFP into a major resistance level, well, there you go. SFP into that would be nice. Let's pull our golden pocket from the lows, from the highs to the lows. And let's see, that's on log scale. Okay, so we already rejected from this golden pocket once. You can see that's where that rejection was from, our log golden pocket. Once again, guys, though, if I turn that off a log, you would have not got the proper level. And yes, you could still use this pocket as well. This pocket will still be respected, but we did reject from the log golden pocket. Rejection, rejection, drop. So now if we break our first level of resistance that I'm even interested is really 71 to 73 cents. But even if we reject from there, we could see a higher low come in and continue breaking up. Monthly, the SFP into the monthly is a really good one to be watching. And let's turn on our naked weekly points of control. Let's see what we have here. We have a naked weekly up near this 96-cent area. And let's look at our naked monthlies. Naked monthlies do often get respected, guys, so pay attention to those. Okay, naked monthly. Our next naked monthly is way up here at like 112. But I would say locally on curve, we probably are going to continue up to 73 cents. We might see a rejection from 73 cents. And depending on how we reject locally, if it's an impulsive or corrective move, this move down here, if it's impulsive or corrective, we can look for either potential lower lows to come in or a higher low and continuation to the upside. So we'll have to determine that once we get there. We are not there yet. Okay, let me check the chat. Rping, thank you for modding. I don't know what, let's see, message. Yeah, I don't know what the message said, but if you removed it, then I trusted it wasn't supposed to be there. Okay, Andrew, what's up, man? Thank you for joining the stream. And Nonsense, welcome in. Lundong, welcome in. Yes, BTC is seeing a rejection. Okay, let me check BTC real quick here. BTC, you guys, if you didn't watch the beginning of the stream, I highly recommend you go watch the beginning of the stream for Bitcoin because we covered some more macro resistances in price discovery and also things that we're seeing. Very, very important analysis on Bitcoin, at least in my opinion. In my eyes, it is. Yes, Nonsense, you did use the log fibs from me. Yep. Yeah, guys. And yes, please smash the like button, guys. If you are getting anything out of this video, please smash the like button. And thank you, Mark Dutch, for doing that. Okay, we did Curve, we did XRP, we did Ethereum. What? Sui. Okay, Sui, guys. Now, yesterday on Sui, we were way down here breaking out of this ascending channel. And I said to watch for us to come up to that 356 to 359 area, to SFP our internal highs into our golden pocket. Anytime you see a swing failure pattern into a golden pocket, pay attention to that. And what happened? We continued pumping, breaking this impulse. Now, I'm going to cover that in just a second here. But I think that we are hitting into this area and rejecting, but I do think it has the potential to keep going because what happened overall, let's zoom out onto larger time frames for Sui. And I covered this yesterday a little bit, but we saw a very, very clean 5-wave impulse to the upside on the daily time frame here. And after finishing that daily impulse, we had a very, very nice 3-wave corrective move to your golden pocket. And if this is the start of a bigger wave one, within your wave one, your larger 5-wave impulse to the upside, your wave one is going to have a sub count of 5 waves. Your wave two is going to have a 3-wave corrective move or a complex correction, which is a series of 3-wave moves. And then your wave three is going to have a 5-wave move in itself or an impulsive move. You know, it could be a double 1-2, it could be a triple 1-2, but you're going to have another impulsive move. Then your wave 4 is going to have another 3-wave corrective move or a corrective type move. And then a wave 5 is going to have a sub count of 5 waves within it as well. So if we're looking at a bigger weekly impulse to the upside or multi-day impulse to the upside, this could all be counted as a wave 1, but you can see a clear 5-wave impulsive structure within this move. Now we were looking for the retrace to that golden pocket. That is why I bought spot right here and I longed right there because we were looking for that golden pocket to come in as a higher low and then to start pushing to the upside. Now we have been pushing to the upside. We were seeing a little bit of a grind in here. So if I zoom in onto like the 3-hour chart, we had a channel that was forming and we were just chopping between the channel. You know, and we broke out of that channel. So this channel's no longer really relevant. We can just delete that. But we were building some impulsive price action. You know, first initial one, this could be a 1, a 2, a 1, a 2, a 1, a 2. Now we have our triple 1-2. Now you're going to expect a big 3. And then you could see a 4-5, 4-5, 4-5. If you have 3 1-2s, you're going to have 3 4-5s. So it does look like we are in your wave 3, by the way, if this is going to be a wave 1 of a bigger one, this was your wave 2 retrace, you expect your wave 3 to be pretty aggressive, you know, all the way up to this area. So it makes sense to have a triple 1-2 in here, a 1-2, 1-2, 1-2, a big wave 3, 4-5, 4-5, 4-5, you know, something like that. coming to take out all-time highs to end your wave 3, and then you can see a bigger retrace in wave 4 that lasts, you know, it's probably going to last as long as this or longer, and then you'll see a wave 5 to end it, and that could be the top of this cycle. We don't know that. There's not near enough speculation, but within the smaller price action, just diagnosing the smaller price action, we're taking local liquidity into a golden pocket. So I expect a bit of a retrace down. So if we look at, first of all, let's grab our trend-based Fibonacci extinction. We're going to go from the lows of wave 1 to the highs of wave 1 to the lows of wave 2. These are internal structures. So we're looking at this here, and we're going to look at our 1.618. So our 1.618 is still above. So we do have a higher probability to continue this third wave up to this purple box area up here. 786 is up here. You can see our macro 786 is up there. We have a naked weekly point of control, a naked monthly point of control, and a point of control of this upper range. We were in this upper range for a bit here. So we have some resistance up there. But we are seeing a small rejection from here, which is normal. Within your wave 3, you will see small rejections and stuff. So I am looking for a potential pullback, and we can look at our pullback from the start of wave 3. And now this is, I'm not saying this is the end of wave 3, but if it is, you can turn on your wave 4 targets, and we would expect to bounce between the 382, the 382 and the 0.5. So around 320-ish. We would expect to not really break 320-ish, maybe see a grind down to that area and then continue. Because even within, guys, Elliott waves are confusing because there's larger degrees within, there's sub-degrees within larger degrees, and then there's micro sub-degrees within those sub-degrees. So this could all be a wave 1, this could all be a wave 2, this could all be a wave 3. But we have, within your wave 3, you have a smaller subcount, a 1, 2, 1, 2, 1, 2, a 3. But within this wave 3, you're still expecting a 5-wave impulse in itself. So it gets very, very confusing and very, very fractalized, microized. But it's a way to kind of diagnose where you could bounce. If we turn on some of our levels here, let's see, naked monthly point of control. You can see it's up in that purple box. We've got the naked weekly point of control in that purple box. Another reason we do have a naked weekly point of control just above us, and our value area high of our range is just above us. So pay attention to those. But yeah, naked dailies, we're hitting into the naked daily. So not only was this golden pocket, it was a naked daily too. We didn't quite hit that naked daily though. And that's why I wanted to really see us come up to 359. But we're rejecting from the golden pocket after taking liquidity. And it's not even really a rejection yet. We're finding some resistance. Weekly levels. Okay. Let me just make sure we don't have any. Yeah, we don't have any weekly levels up here. We don't have any monthly levels. Actually, yeah, that monthly's been taken out. I'm sorry, guys. I know this looks messy. Okay, that monthly's already been taken out with this candle, so we're not looking at that. Daily time frame. Okay, we also had that fresh daily level that was up near this golden pocket. You can see this daily here. So that's kind of where we're rejecting. Actually, let me turn those dailies on. You'll see that that daily level right here is where we wicked past it up into our golden pocket, but our candle body close is closing at this daily level. So we wicked up to take it into the golden pocket. If we close this daily candle here below the daily, then we're going to have a fresh daily resistance in the same exact area. But just be aware, we are at local resistance on SUI. The money flow is starting to look a bit concerning here. It looks like it almost wants to roll over. And but NAMI's money flow looks pretty good. Let's zoom in onto the 4-hour chart. Money flow looks pretty good here. It's leaving on NAMI, but no bear divs. Okay, so that's a key thing. We're not seeing any bear divs yet. So no major rejections expected. 2-hour, no bear divs. Money flow looks pretty healthy still, but it is starting to drain out on both NAMI and Market Cipher B, and very locally on NAMI, we did get some bear divs through this. Higher highs in the price action here, lower highs in the momentum waves. That means we could get a small pullback from here. I actually expect a small pullback from here. You know, 320-ish or something like that. Maybe 328. Okay, 1-hour chart. Yeah, we are seeing those bear divs finally on the 1 hour and under. So you can see lower lows on the price action, lower lows on the momentum waves here. Money flow on NAMI draining out of the asset, just crossing into the red, and on Market Cipher it's now starting to dip here. So I expect a little bit of a small pullback from this area. And even if we look very, very locally, let me go zoom in onto the 15-minute chart, and I'm going to show you guys. We just rejected from the very, very local Fibonacci golden pocket. So once we hit into our highs, we had an initial dump here. Now, if you turn on your golden pocket, this is how you get into short positions, by the way. If you missed the bigger SFP right here, you saw that SFP, and then guess what happened locally? Broke market structure bearishly locally, right? We finally broke it to a lower low. Yes, it's just a wick, but now that we are starting to see the very first signs of market structure break, higher high, higher low, higher high, higher low, higher high here. Now, oh, not a higher low, it's a lower low. Well, now because we're creating a lower low, we can look at that lower high golden pocket. If we reject from that, you could do a short position from here. Hold on, let me clean this up. You could look for a short position from this local golden pocket. Stop would go above your highs, and you would be targeting, I'd be targeting at least these range lows down here. But that is not the best risk reward. That's a 2.37 risk reward ratio. That's still good for a scalp right there. But if you could even target the 382, 3.84, or the 0.5 down here, you're going to be targeting. But that's a way you can look for scalps and look for, because we confirmed an SFP into a bigger golden pocket here, and then we changed local market structure bearish. Now you could look for a little bit of a dump here. Just a retrace, a little small retrace. It could be as low as if we come take out these lows at 338. You could see your bigger three-wave corrective move to take out those lows, and then you could continue. So let's actually look at that. I'm interested because I am short on SUI right now. Let's go ahead and pull from the highs to the lows to our lower highs. Let's turn on those ABC targets. Okay, check this out, guys. I am now going to have a TP right here. Because if we SFP these lows into your 1-to-1, and this is just a small ABC correction before continuing higher here, then your 1-to-1 target is grabbing the liquidity of these little range lows. So now I am actually going to come into my app and change and take at least 50% profit there. Actually, I'm probably going to take 65% profit there. Let's see, what was that? 338. Okay, 3. Okay. So yeah, that is about it for SUI, but overall I expect SUI to continue to the upside. It is looking still very bullish. Nice, Mark Dutch. I'm not quite there yet. It's still mid-afternoon for me, but I'll maybe grab a brewski later today. What's good, my man? Curtis J, what's up, dude? Barra, yes, we'll check Barra. You guys, I got 15 minutes left, so does the weekend seem to affect Elliott wave patterns? No, not really, Don. Elliott waves are respected because they're based off human psychology, and human psychology doesn't change just because it's the weekend. So that's why an Elliott wave theory is the best theory out there for predictive motions, because it's based off of impulsive and corrective moves, and Fibonacci, which is ingrained in every aspect of our life and nature and in our mind psyches. So Elliott waves for me really are the best, and that's why people like Coons are such good traders. Andy and Dual, those guys, the Bitcoin consensus community. So I think Elliott waves are a great tool to learn. They're a very hard tool to learn. To really get them down, it's going to take years of discipline and learning. But if you can use I'm not an expert. I don't consider myself an expert at Elliott waves, but I do consider myself, I know enough to kind of use it in conjunction with my other stuff to help me find these really nice opportunities. Yeah, okay, just caught up on the comments. Drink would be good. Yes, it would. What's up, Darren Does Things? It's good to see you in here, man. You just got a nice coffee. Ooh, that sounds good too. Okay, let me go into Barra real quick here. Barra USD. Okay, does this look like the right one? Well, gosh, I mean, I don't know too much about it, but that's not very nice looking. You are at lows, so you know what? You're at lows and you're starting to break daily market structure bullishly, breaking these lower highs on the daily. Your first sign of strength here. Be aware that you could see. All right, you're breaking that ascending channel even to the upside, so that's kind of nice. Let me just look at this here. Yeah, looks pretty nice here. You know, flipped your midline here, broke above it. So I would watch for taking these internal highs here just above us. If we take these internal highs, you might see a little grab of those internal highs and then back test this channel and then continue. But it does look like, okay, money flow looks pretty good on the 4-hour. Let's zoom out to the weekly. Let's mark out some of our levels real quick. Let me just get rid of some of this. So we have our weekly resistance up here and our weekly support. Now this candle hasn't closed, but I'm just going to mark it there because it's a high probability that we close this candle green. So that's not a confirmed weekly yet, but I'm marking it out. And I'm not even going to mark that out. Okay. Daily. All right, we have a couple nice daily levels. Man, there's no really even good ranges here. I mean, you have this little range in here that you could look at. And let me pull this to this candle. Yeah, okay, the POC of this range is at that 327 daily. Let's now pull some fibs, and we'll pull a fib from this big low, high to low. Let's turn that on log scale. Okay, so a couple key things here I already see. You have a liquidity grab of a major lower high into a golden pocket, and you have a weekly close by. So this box here is going to be a box of resistance that I'm interested in. Okay. But there's obviously a lot of work to do before getting up there. Let's check. Our bearish pitchfork. This is not, yeah. Okay. So we're starting to break the pitchfork. Okay, this pitchfork actually is respected. You can see here, in our downtrend, chopping around the midline, lost the midline, came to the lower band, tried to break, got above the midline, tried to hold it, came to your upper band, rejected your upper band, chopped around the midline again, came to your lower band again, held the bottom of, this time we held the top of the lower band, this time we held the bottom of the lower band, chopped around your midline for a few weeks, couldn't get above it, or a few days, got above it. Now we're breaking out of the pitchfork. So once again, we're breaking a bearish trend. You know, we already established that we're breaking a bearish trend by breaking these lows as well. So now you have a little bottoming range as well. You can look at this like lower range here. The value area high of your range is going to be about 176. The highs of that range are probably going to be more important. You don't really want to go down below those highs again, these highs here. So watch for the back test of the highs at 190. And that's also going to be the bullish backtest of breaking your pitchfork. If you come down to that area, you hold that area, you have a high likelihood to come up to this daily at 257. That daily, let's check some stuff here. Yeah, weeklies, okay. All right, so we do have a couple naked weekly points of controls. I really like this one right up here because it is going to be near our daily level. That's a naked weekly. And then let's check out first our naked monthlies. All right. Well, we do have a naked monthly kind of in the middle of nowhere, 288. This one's kind of a tough one because it's been in such a large downtrend that it's just starting to break here. But I would say Let's pull a fib. First off, let's check this out. Is this more? Now, guys, on these fib pulls, I've told you to the upside, if it's more than 100% pump to the upside, you generally want to turn it on log scale. Well, if it's more than a 30% dump to the downside, you want to use log scale. This is a 68% dump to the downside. So when I pull this fib from this high to this low, I am going to change that based off log scale. Oh, it is. It's already clicked. Okay. So check this out, guys. We are starting to develop some confluences here. We have a golden pocket right on top of our naked weekly point of control and a daily just above. So I would say this general area is now starting to find some confluence of resistance. And also, if we look at this range here, I believe that was where this range point of control was. Range value area low is there. Okay. So this general box here around 317-ish, I would say, is going to be a level of resistance. Daily at 257, watch that because these lower highs are there and you could grab liquidity of these two lower highs, wicking above this daily, grabbing that liquidity and see a bit of a retrace. But it is starting to look pretty good. If we look on the weekly time frame, okay, we don't have enough data really to give us any weekly. Let's do a 2-day. 2-day money flows coming to the upside. We have bottomed out. Money flows coming to the upside. And no real bull divs here, unfortunately. Let's look at our 1-day. Yeah, no. Unfortunately, we didn't have bull divs at the bottom here. But you can see we started to find a base here and consolidate. So this push up, just be aware that this push up could end in a lower high and we could continue the downtrend. One of the things that I would do is I'm going to pull a fib from your last daily highs. Just these daily highs here. 257 down to your lows. Now this is not going to be on log scale, so we're just going to change it to our regular golden pocket. And we are coming up to that golden pocket right now. So be aware, and remember I just said earlier on this that we could reject from those highs just above us. These lower highs here, and that's into your golden pocket. So remember, anytime you see an SFP into a golden pocket, pay attention to that. So very, very locally, we have the potential to come up to hit this 216 to 220 golden pocket. SFP into the golden pocket. Now, if you reject that, expect maybe that move down to 190 to backtest your bearish trend that you're breaking, and then we could push up to the next daily, SFP of the next daily levels, see a small retrace, and then continue pushing up to some of your higher resistances there. But it's not looking too bear. It's looking starting to look bullish here, but I would say it's not having the major bull divs we would want to see at a major bottom. So just be aware, this is a bottom accumulation range that could be forming, and we could be seeing, you know, this range for a bit, reject from here, kind of range from a bit more, start to form more of an accumulation range, and then you could see a real breakup. But it does look to be getting exhausted in the selling, and it does look like we're starting to find a bottom here, and we're breaking market structure bullishly. So if, you know, I would say this coin is near its lows, and like, if you're bullish on this coin fundamentally, I would personally wait for a little bit of a retrace if you're not already in, but this would be a good opportunity. I mean, this thing, it looks like its entire life it's been in a downtrend, so I have no idea the fundamentals of this coin or anything about it. But if you are bullish on this longer term, it's not a bad opportunity to be buying in this general area here. Like, it, you know, the risk reward ratio is pretty good, because even if you longed right now, like if you're bullish on this, you longed low leverage spot, or, you know, whatever, like if you're on derivatives, but you're looking to take out the all-time highs, you're going to put your stop below the lows here, and then you're going to be looking to take it up to, you know, even if you're looking to take it up to that golden pocket area, that's still a 4-to-1 risk reward trade for a you know, 4x, you're risking $1 to make $4 there. So of course I would be using low leverage. I mean, your leverage doesn't matter. Your leverage is literally going to be based off of this percentage here, but it is a 30% stop loss. So you're only going to be able to use 1/30th of your portfolio size. If you get stopped out, you'll lose 1%. So obviously you don't need to use leverage. You know, leverage is only really needed if this is under 1% here. If your stop loss is under 1%, then you can use some leverage. Or you can use leverage because you don't want to tie your entire portfolio up in one trade. I can make a video on that sometime about risk management because it's the most important thing. Okay. Energy drinks are bad. Yeah, energy drinks are bad. I love coffee too. Darren does things. Coffee is my thing. I love it. 4 black coffees. That's a lot though. And then electrolyte water. Okay, I like electrolyte water too and alkaline water. Don, thank you so much. I appreciate that comment. You know, I just do my best to show you guys what I'm thinking on the market. Of course, I'm not always right, but if I can provide some insight at all to you guys, that makes me happy because I am a person that truly does believe if you put out good into the world, you will receive good back. Whether you want to call that karma or whether, you know, I know that there are a lot of bad people that get away with things, but I do not live my life that way. And I have a belief system that I put out good and I'll get back good. So, and I'm not doing it for that reason either. It's just also kind of just the right thing to do. 8 cups of coffee a day, Darren? Dang. That is kind of a lot, man. But okay, guys, we have 5 minutes left. Let's just go look at Bitcoin real quick here. We are going into the weekend. I'm not going to be streaming at all over the weekend, but Tuesdays, Thursdays, and Fridays at 3 p.m. Eastern time, I'll be doing streams here every week. And we might do some other streams at other times, but I'm going to still put out my daily YouTube videos. So if you guys want to get in on any of these streams, just turn on notifications. We do have a couple partners of the channel, guys. We have BYDFI, and I did describe earlier. So they are a KYC free exchange and a VPN free. All you need is an email and a password. And they're offering some really good initial deposit bonuses. So if you deposit $100, you can get a 50% initial deposit bonus. Like, that's really good, especially if you're a beginner trader. They're also offering discounts on trading fees. So you'll get a 17% discount on trading fees if you deposit $100. But the more you deposit, the higher your discounts can get on trading fees. And then they're offering up to $8,100 in futures trading bonuses, depending on how much you trade in your futures markets. The second is, like I said, NAMI here. NAMI is a momentum and money flow indicator. They're offering a 50% off special for a limited time. If you want to join and get that special, links are in the description for that. And then lastly, we have MEXC. And MEXC is doing a campaign right now. They just opened a new launch pad. And if you, the pump.fund launch pad, so you can get up to 40% off sales on tokens for that launchpad if you sign up using my affiliate link. They're also offering 10% cash back on your initial deposit, and I believe it's $20,000 in futures trading bonuses there. So all the links are in the description for that. If you're interested, just let you know, it's a way to help out the channel. I am going to be creating a Telegram channel partnering with BYDFI here, guys. It's going to be a free Telegram channel, free for you guys to join if you sign up with my affiliate link. So all you have to do is deposit $100. It's still your money. You still get to keep it. You still get to trade it yourself. You still get a 50% deposit bonus from doing that. But if you deposit and show proof that you're using BYDFI as an affiliate, then you guys can get access to that Telegram channel. And I will try to keep you guys posted on what I'm thinking in there, show potential trade setups and stuff like that. So I just want to say thank you guys all for joining today. It looks like it is starting to be, you know, it's weak in price action, but Bitcoin is not really seeing a rejection here. We are seeing a little bit of a consolidation and a little bit of corrective price action, but I would really watch, guys. I would really watch now that we have that rejection from the golden pocket. Let's throw that channel on there. I would watch for a slow grind down in this channel. I don't know if we're going to make it all the way to 114K over the weekend, but if we come back down to 114, you know, 114.4-ish, 114.3, and we're developing that channel as we're coming down here, and it's looking like corrective price action, I'm telling you, this could be a good long to pop, you know, to pop up to 121 or even higher. So just pay attention to that. I will be paying attention to that myself. Now that we're breaking above this, and look at this volume imbalance candle breaking it. Like, that is picture perfect. And yeah, really good looking. I didn't get a chance to cover Say, guys. I wanted to cover Say, but I will cover Say tomorrow because Say looks like it has been in a bigger accumulation. You know, whether you want to call that an inverse head and shoulders, left shoulder, head, right shoulder, or a Model 2 accumulation, breaking the neckline, back testing that neckline, and now exploding. I think Say has the potential to come up to like that 50 cent area over the next weeks here. So thank you guys for tuning in, and I will see you next week.